Welcome to your weekly market update where we talk about everything mortgage and real estate related. We have some great information to talk about as always, so let's jump right in it. First off, the Case-Shiller Home Price Index, which is the gold standard for appreciation, show that home prices rose 0.7% in September. Home prices have been on the rise since January and are now up 3.9% from last year. Now, Case-Shiller is continuing to set new all-time highs in home prices as of July. This index is on pace for 6% appreciation this year, but remember, we only have the data through September so far. It's likely that we think that we may see that pace slow through the end of the year, which is typically a slower time for appreciation. All 20 cities saw gains, so the increase in today's report was widespread throughout the entire country. The FHFA, Federal Housing Finance Agency, released the Home Price Index, which measures home price appreciation on single-family homes with conforming loan amounts. Different than Case-Shiller, it does not include cash buyers or jumbo loans. The FHFA reported that prices rose 0.6% in September and are up 6.1% year over year. FHFA has continued to set new record highs in home prices every month since February of this year. As for existing home sales, which measures closings on existing homes, showed that sales fell 4% in October to a 3.79 million unit annualized pace, which was weaker than the estimates. The decline was expected as mortgage rates jumped to 8% in October. But since then we've improved and should translate to some stronger numbers next month. We could be seeing the bottom in home sales, which is great. On a year-over-year basis, sales are still down 14.6%. The pace of sales is being kept down by inventory, which is at roughly half the levels we saw in 2019, which was already low. Inventory levels increased 1.8% last month to 1.15 million, which is still extremely tight. Inventory is down almost 6% from last year. We normally see a seasonal buildup of inventory around this time of the year, but we are getting very little. There is a 3.6 month supply of homes, which is tight because 4.6 months is considered normal. Homes remain on the market on average for 23 days, while 66% of homes sold in less than 30 days, still showing that demand is strong for what is out there. The NAR said that demand is still strong and multiple offers are still common, especially on start and mid-priced homes. First-time home buyers accounted for 28% of sales, up from 27% in the previous report. Cash buyers, check this out, accounted for 29% of sales, which is unchanged. Investors made up 15% of the transactions, down from 18% in the previous report. A lot on real estate. As for mortgage and inflation, Apartment List released its November rental report showing that new rentals fell 0.9% during the month and are down 1.1% year over year. This is the fourth monthly drop in a row and should translate to lower shelter costs in the inflation report we received from CPI and PCE, which would be a big benefit for lower inflation. Consumer confidence is at the lowest reading we've seen since July of 2022. The labor market continues to show signs of weakness, and durable good orders are softening and are pointing to a weaker economy. These are all signals of a lower inflation and lower mortgage rates in the near future. The MBA released their mortgage application data for last week, showing interest rates were unchanged at 7.4% and are about 7.8% higher than they were this time last year. Purchase applications rose 5% last week after rising in the previous 3 weeks, but they are still down 19% year over year. The recent decline in mortgage rates is helping spark some new activity and demand. Fannie Mae and Freddie Mac increased the conforming limits to $766,500 for 2024, a 5.56% increase from last year. Bottom line is buy now and refinance later. When rates drop next year and inventory is still low, we will see bidding wars again due to the increase in demand. Let me know if you have any questions. I know it's a ton of information. Thanks for watching.